What's up, guys? Welcome back to another video. In this video, we're going to be covering top-down analysis. I'm going to be showing you how you can perfect your top-down analysis, okay, how to structure it and the best ways to go about it. All right, so the importance of this is for you to understand what your structure points are, what your supply and demand zones are, and how you can put all that together in order to find your trade, whether that's going to be a swing trade, intraday, or a scalp trade. Now, you will see as we go along, you'll see that you have potential to do either one of those, okay? Because I consider myself a swing trader, intraday trader, and a scalp trader, because you should be able to do all of them. And if you know how to analyze your charts properly, then you'll have opportunities to do any types of trades. All right, so I'm on EU right now. We're actually going to jump into GU, and I already have a lot of it marked out, so I'm going to jump into a fresh pair for you guys, and we're going to cover that because I've already did an overview on GU for the Discord. So I'm just going to do a fresh one, and we're just going to cover that, and we're going to go about how I took the time to analyze this on like a top-down analysis, going from higher time frame all the way down to lower time frame and currently now. Okay, so now that we are on a fresh chart, we are on a daily time frame right now. So the first thing that we need to do when considering higher time frame and considering your top-down analysis, we start off with structure, right? Everything is about structure. Structure is the most important thing when it comes to these markets, okay? You have to understand the direction of the market. You have to understand where you are in the market in terms of structure. That's the only way for you to take the best quality setups as possible. If you don't know how to identify your structure points, then you're pretty much lost and you don't know where the market is going. So I've talked about these three keys before. We got structure, supply and demand, and cause and effect. So we have structure. Well, when we talk about structure, we have three types of structure. We have higher time frame structure, we have intraday, and then we have a lower time frame structure, right? We have these three that we focus on. So higher time frame structure is the top dog, right? This is the top of the top. Then you got intraday, and then you got lower time frame, which is the lowest. So it goes from higher time frame intraday to lower time frame. Higher time frame is the most important. So we're on the higher time frame right now, and you're gonna understand why I say that later, because we're gonna neglect the intraday time frame later, and you're gonna see why I neglected the intraday time frame. Okay. So let's look at GU, right? We don't care about what's going on over here. Okay, that was super long ago, right? What is relevant today? What is relevant in our price action today? This is. So looking at our higher time frame, we want to identify our swing high to our swing low. This market on GU is bearish. We have our swing high right here. We have our swing low right there. All right, so essentially we are in a bearish market. So we are in a bearish market, so our trend is bearish, right? We want to be looking for sales. That's going to be our higher time frame trend, and that's what we're going to focus on. All right. Now, essentially, we do see one more thing. We see this huge manipulation. I want to talk about that because there might be some questions about that huge manipulation. Yes, we see a sweep of liquidity right here. Sweep of these lows. We have this huge sponsor candle that you could call it. The only problem is this huge manipulation that took all this liquidity was not strong enough to create another high. As you can see, we came inside of this supply zone in here, and we reacted from there. So that just goes to show you how strong structure is and how strong structure can be, right? Essentially, this right here is a ugly distribution. It's a type 2. And you can just see how we reacted from there. So now this is the importance of understanding higher time frame structure. So now we know why we're seeing this bearish price action that we're seeing today. So the point of this is we have right here, this is our extreme of this huge leg towards the downside on higher time frame. So this makes this a valid supply zone. As soon as we reacted inside the supply zone, we had a distribution here, which we're going to zoom in later when we start talking about lower time frame structure. Okay, so essentially right here is our slingshot, and then over here is our extreme, and that's our main point of interest. Okay, so now you guys understand why we neglected the intraday time frame, because we don't need to know what intraday structure is doing anymore, since higher time frame is above intraday. Okay, so essentially now what we need to do is zoom in into our lower time frame. I'm going to go to the 1 hour and we're going to see what our lower time frame is doing inside of this area, and we're going to go down and mark up our lower time frame, right? So this is why it's very important to understand how these markets move. Okay, so essentially let's look at it. What is our most recent leg here while we're on lower time frame? So right now we are from this low to this high, this low to this high. Okay, right now, right here, we have broken lower time frame structure. Okay, so now we are from what? This high to this low, this high to this low, this high to this low, this high. Since that high, we have not shown a new low yet. So all of this right here is order flow. Order flow is internal structure. So basically it is the little moves, or the little moves inside of that entire leg. So essentially, to make it more easier to understand, you see how I said from this low to this high is a swing point, right? From this low to this high is our lower time frame structure. Well, you can see this little structure inside of here. That's our order flow. All right, that is our order flow. You can have bullish order flow, you can have bearish order flow. Okay, order flow is just the internal price action inside of a leg. Okay, so essentially analyzing this, remember we started on a higher time frame. So this is how top down analysis should be done. All right, you have to understand the overall view of the market to know where the market is going next and how to position yourself to play the market. So once you're on the lower time frames, and I'm going to show you a clean example of why, once you're on the lower time frames, you don't get confused on where GU is going. Okay, because I know GU is at a tough spot right now where it's just messing around. So because we understand our higher time frame and what the market has done before and what our analysis is on a bigger scale, now we know that all those little fakes and those little manipulations that GU is doing right now currently, as today's price action is doing, we don't get faked out in that. Okay, so essentially we see as soon as we reach this higher time frame daily supply zone, we have a distribution. Now this is where a swing trade comes in, right? This is a possible swing trade here because this is a higher time frame area. This is a higher time frame supply. Okay, I don't think you understand the emphasis on this. So essentially this distribution could be set up for a swing opportunity targeting these lows. If you would have caught a distro inside of here, well, if you would have caught this distro inside of here, and we have back tested this already, so we know there are opportunities inside of there. There's plenty of mitigations. Without me even zooming in to it and not covering it too deep, you can see how much mitigations you have. Right? You can see the amount of mitigations the market gave you, the amount of entries to go down. Okay? So essentially, that is a perfect opportunity for a swing trade. Now, let's say you didn't catch this. Well, higher time frame is bearish. Okay? Lower time frame just became bearish. What do you do now? Now you trade the lower time frame. So now you don't worry about the higher time frame anymore. And that's why I neglected the intraday. So I hope you guys are seeing why I didn't care about the intraday. All we're worried about is higher time frame and lower time frame because intraday is just bouncing in between those two. Essentially, higher time frame has reached its target. We have mitigated this higher time frame supply. Now we are worried about lower time frame. If you didn't catch this entry in here, now we're worried about lower time frame. So now we can continue to sell this until we reach a new low, which is going to be down here. Okay, or you can continue to sell it targeting every new low, right? You could do it in many ways, right? You could either take intraday sales, lower time frame sales inside of this, or you could take one big swing. Okay, let's say you didn't catch the big swing, you could take many sales down as much as the market is going, targeting this low right here, because you understand higher time frame is bearish. Okay, so that is the point that I'm trying to make here. So essentially, zoom in into this, right? Here's our next low that broke lower time frame structure. As soon as we break lower time frame structure, now you have an opportunity to take sales. Well, here's the supply zone right here we reacted of. There's your potential opportunities on lower time frame. Okay, understand I am on a bigger time frame just to show you guys the legs properly. So I'm not really going to be covering entries. I know there's a whole bunch of entries inside of here because there was entries that you could have caught in here, and I can cover that personally. And then there was entries in here. So I'm going to dive deep into these right here, that many entries you could have caught there. All right. So next, we have a high, low. Since this didn't create this new low yet, this whole thing is one move to the downside. So essentially, this is our extreme. This is our continuation move down. Okay. So the market came into where? Our continuation. Here's another entry possibility. Market continues down. So now this right here becomes our high. This becomes our low. Well, what do you think is going to happen? We'll retrace back. Another opportunity. This is our high. And then, did we make a new low yet? Okay, this is where we didn't make a new low yet. So essentially, we made this mitigation right here, and now we have this redistribution. Well, let's zoom into this redistribution. Let's see the opportunities. And it's important that I go through this like this so you guys can understand where we are right now. This is how we do our top-down analysis. You have to understand every move and why the market are making these moves. Okay, so one particular place that I can cover here, I can cover a couple of trades. Is before we even got this move down, hopefully the market lets me get it. Boom, you have a clean distribution in here. A lot of people caught this. Clean distribution, market broke this low, retest. I know you guys can see the wick right there where it came for the entry. Right here, market moves down. Okay, why are you able to take that trade? Because you know higher time frame is bearish, so we can trade on the higher time frame basis that we're going to go down. So that's important. Once we come to this lower time frame, we don't get faked out. You see how much fakes right on this kind of lower time frame right here. You see how much like mess that the market created right here. But overall, guess what we did? We ended up still going down. Why? Because higher time frame we are bearish. I hope you guys are understanding that. So the point of this is you're not going to be trading higher time frame. Now, when you have the opportunity to, like we did up there with the swing opportunity on the distribution, you can have opportunities like that, right? But most of your opportunities are going to be coming from trading this intraday and lower time frame price action in here. But as long as you understand what your top down analysis is, you understand what your higher time frame is doing, you have an overall view of the market, then you know where to be making your trades. You know whether you want to buy or sell. In this case, you're only looking for sales because you know higher time is bearish, intraday is bearish, lower time frame is bearish. Why are you looking for buys? You understand what I'm saying? So you wouldn't have that knowledge if you didn't go and have an overview of the market. Okay, so essentially now all you're doing is just playing the market down, right? You're just playing the market down. Any opportunity you get, supply zone, you look for sales. Okay, so here is a distribution inside of here before we had this huge move down. Cool. Now guess what? We're inside of this area, right? How do we trade that? Well, essentially, guess what? We have another distribution right here that breaks this low. We break this low. Essentially now we're in this order flow, right? So now we have to go down even lower on order flow. So this high right here made this low. If we are bearish, what are you going to do? You're going to sell the market. Here's another opportunity to sell it again. Okay. Market continues down. Now you're waiting for your next area to sell it again. Well, here's another supply zone. Here's another opportunity to sell it again. You see what I'm saying? So essentially, you have many opportunities. I didn't even cover the amount of opportunities that you could have gotten inside of these areas right here. I didn't even cover these. I didn't cover all of these, right? So much opportunities. And the lower time frame or the order flow moves inside of there as well. I didn't cover those. So there's many scalps. There is many intraday plays. There's many swing trades you could have caught in this just by understanding what your overall view of the market is. Okay, so how does that play into today? So like I said, here is current price action. What's going on right now? Well, guess what we did, right? And a lot of people was looking for this. We're looking for sales out of here. We invalidated this. So what? So us invalidating this small supply zone, does that just mean we're bullish now? No, it means we're going to target our next supply zone. So what does that allow us to do? Now, if GU wants to go up, right? Let's say we break this high. This is going to be our new low. This is going to be our new high, right? We come down, we give an accumulation. Where can we target? Here. Now we can potentially take a counter trend or a hedge opportunity. The reason why I say a hedge, because understand our structure point is all the way up here. This is our structure point. Are you going to wait for GU to create that? Because guess what? We can still invalidate this because all of this is just order flow. Remember what I said about order flow being internal? This is the last high that mitigated all these highs. So this is where the structure is lying, right? So GU could potentially go all the way back up here. Doesn't mean it will, but it could if it wanted to, right? So are you going to wait for GU to do all this buying, or could you potentially participate in a hedge opportunity and catch this whole buy up here to sell it down again? You see what I'm saying? So that is the opportunity that you have when you understand your top-down analysis and you have a good top-down analysis, okay? So now we just have to wait for GU to make its move. Either we're going to get that buy opportunity, that hedge position, or we could just distribute. That's even better for us if we distribute. So either way, GU is trapped for us because we understand where it's going. So if it gives us this distribution to go down, we're just going to continue to sell it like we were before. There's nothing that's changed. We're going to be confident in the sales, honestly. I would love for it to continue selling because those are easy trades, okay? But if we do get a hedge, right, we do get a hedge position, that's an opportunity for you to catch some moves while it's going on this counter trend. Now, understand you want to catch the hedge as soon as possible, all right? You want to catch the hedge as soon as possible because once we start approaching these areas, the market might get choppy. So you want to catch the hedge down here while it's giving it to you. That's the best part to catch a hedge position is at the reversal. We are still in the reversal phase if we get the reversal. So if you want to catch the reversal, this is the best place to do it. Don't try to catch the market on a counter trend while it's already doing this expansion, okay? That's where you get a lot of stop losses, and then the market starts looking choppy. That's where you get your complex retracement and complex pullback, all right? So I hope you guys understood the idea of this top-down analysis, okay? If you understand your higher time frame, your intraday time frame, your lower time frame, you know where your supply and demand is, you're good. All you have to do now is wait for that cause and effect, right? You have to wait for that lower time frame entry, wait for that entry that proves to you that the market's going to go lower. And that's simply it, guys. So I hope that kind of opened you guys' eyes up to know how to do your top-down analysis. So I hope you guys understood how we just broke down GU that simple, okay? So I will see you guys in the next video. If you guys have any questions for me, if you guys want me to cover another pair or whatever the case may be, just let me know and we will get on that, okay? So peace out, guys. Enjoy the rest of your day.